The Morgan Report with David Morgan. Discover how to build and protect your wealth at themorganreport.com.
David Morgan of themorganreport.com with a weekly perspective for the week of March 17th through 21st. Let's start with the metals, where the action really was pretty historic this week. According to Kitco, gold hit an all-time high of $3,117 an ounce early Friday before settling just above $3,080. That's an 18% gain year to date. Silver, not to be outdone, surged past the $35 an ounce, its highest level since 2021, and it's up about 20% for the year. It did back off on Friday somewhat. And what is the perfect storm? Well, as most of us know, it's the geopolitical instability, and that's front and center. The tariff war initiated by President Trump has escalated with a new 25% tariff slapped on import vehicles, including those from Canada and Mexico, and these moves have rattled the global markets and pushed investors towards safe havens like gold and silver. Central bank buying continues at a record pace in quarter four 2024. Countries like Poland, India, China, and Kazakhstan significantly increased their gold reserves. This trend has not slowed. You might ask why, because gold is outside the reach of the U.S. Treasury sanctions, which took place with the war in Russia and Ukraine when the U.S. actually sanctioned funds from Russia. A bad move. Retail and institutional demand are rising. Institutional far more than retail, although it's starting to show signs of life. Gold ETFs are seeing inflows again, and physical premiums are climbing slightly. Copper needs mentioning. Futures went to $5.24 per pound this week before backing off. And this is an interesting week for silver. On the 31st is what's going to be Silver Squeeze 2.0. I want to take a look at that briefly. So you get to our Twitter feed, which is pretty easy. Just type in, I don't know if we'll do it by name, but just Silver Guru 22. That is it. I reposted this article, which everybody should look at, from Michael Lynch. I just followed him back. I don't know how I missed him. This was sent to me by one of the better knowns in the silver world early in the week. Definitely should look at what he wrote here about HSBC. I read his background briefly. Oil guy, knows his stuff, wise in the precious metal. Definitely will be looking at what he posts from now on. Other posts worth looking at, of course, they just kind of went over what's going on in gold and silver. And again, in this silver short squeeze, I was interviewed on Friday about it. Personally, I don't think it's going to have as much oomph as it had on Silver Squeeze 1.0, but it may. I don't know. Time will tell. There's some words here from Rick Rule about what to expect. Scroll down more. There's me here with a clip from what I did with Charlotte yesterday regarding the Silver Short Squeeze 2.0, my thoughts on it, and that's all it is, my thoughts. We'll see what happens. I think what's interesting is that there's been a big buyer, which I'll scroll to here in a second. This was posted, or reposted, I guess I should say, by Eric Young, who's been interviewed recently by Moneko64 and a few others. Anyway, here's what's interesting on this Silver Squeeze 2.0. This is at David Bateman. You can follow it up. And he is buying a great deal of silver, 12.69 million troy ounces, according to this post. You can go ahead and click on here and read the whole thing. But that's a good start to Silver 2.0. I'm laughing out of joy. It's really interesting to see that. And you don't see people of that size actually publicly proclaiming it. Most people that are buying in that kind of quantity usually are on the quiet side of things. But regardless, nice shout out to Mr. David Bateman and Eric Young. Thank you. And according to oilprice.com, West Texas Intermediate traded in the 80-83 range a barrel this week, with Brent hovering around 85. Prices were relatively stable, which we will see as it progresses, because what's moving the needle? Obviously, geopolitical tensions in the Middle East, and that remains a wild card with all the talk about what's going on with Iran. OPEC plus production cuts are still in place, and demand outlook is mixed. Natural gas, meantime, saw a mild pullback. Turning to the stock market, Equities in the major indices had a choppy week. The S&P 500 ended the week flat after a midweek sell-off. The Nasdaq dropped about 1%, led by lower tech giants like NVIDIA and Apple, and the Dow Jones managed a 0.3% gain thanks to strength in energy and industrials. The market's starting to digest the reality that rate cuts may not come as quickly as hoped, and the latest Fed minutes showed a more cautious tone, with several members expressing concern about sticky inflation. At the same time, corporate earnings are under pressure. And then there's the tariff war. Investors are beginning to price in the economic drag from rising trade barriers. Sanctions like auto, semiconductor, and consumer goods are particularly vulnerable. So in the big picture, United States debt just crossed $34.5 trillion. Interest expense is now the fastest growing item in the federal budget. Meanwhile, inflation is proving stickier than expected, with the latest CPI print coming in around 3.6, and that's the official numbers. If you listen to this shadowstats.com, my friend John Williams, you can add about 9 points onto that. The U.S. dollar has been surprisingly resilient, and the strength is starting to fade. A weakening dollar is bullish for the commodity sector. Gold and silver are now in a breakout mode. We'll see if it continues. Looks like they may. Is it a short-term trade or is it a structural shift? Time will tell. Oil and energy remain strong and vulnerable to anything that happens on the geopolitical side war-wise. And stocks are vulnerable. It looks like the rally is finally coming to an end, and we may be seeing a shift in asset classes from the paper side, stocks and bonds, into the commodity side, with the monetary metals leading the way. I'll wrap it up there with this week's Weekly Perspective. David Morgan from themorganreport.com.